What's up, folks? Dean and Lane here. We're going to be going over the monthly market update for you folks in Hawaii. But here we go.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We're just two local guys with so much to say. So listen to the Real Estate Braddahs today.
All right, so let's get right into it because we have a bunch of news because we are a little late this month because I went squaring off on the mainland checking out some of my projects. But Dean, why don't you take it away? And if folks are jumping on late, feel free to type in any questions or comments. We always like to hear what you guys have to say or anything we can do to help.
Yep. Thanks, Lane. Yeah, I hope you had a good trip. I'm jealous, but yep. My name is Dean Ueda. I'm a real estate investor and realtor in Hawaii. You can catch me on YouTube or yep, realestateofhawaii.com for a CMA based on your tax assessment. Um, I'm constantly getting questions now, especially more than before, regarding what's the market like. What's going on. So we always like to start off with these slides that are presented by the Honolulu Board of Realtors, and as Lane mentioned, is because we're later on to the month, we have the official uh, visual from the Honolulu Board of Realtors. The bigger one on the left is September, and I put prior months, August, next to it, just so that we can compare the two. When you talk about prices, everyone's talking about median single family home prices, and of course, it's good to watch. But a lot of times, an uptick or a downtick of just $25,000, makes a big deal. But I think more of the news is in the other numbers. So, but just to cover these, um, we see compared to same time prior year, an increase for single family and condos, median single median prices of about 5% for both at 1.1 million and 502,500 for single family and condos respectively. But the more important news, I think, is we're looking at the second um, no, row here, which is closed sales. So for single families, down 34% um, to 278 closed sales for single family and 496 for condos, which is down about 19% from prior year. And if you compare it to August numbers, you see it also was a slight decline for both. And again, looking at days on market here, we also see a big uptick compared to prior year, 100% increase to 18 days for single family and a 27% increase of 14 days for condos. Um, as always, we want to dig in and look at other information to give perspective on things, right? So here's some other additional statistics that are fun to consider. Sales versus prior month. So for single family, it's down almost 12%, and it's down 2.4% for condos. Um, when you're looking at what sold above original asking price, we had 36% of single families sold for above original offer, and compared to prior year of 64%. So I mean, it's all relative, right? 64% sounds like super high, and I think 36% is still relatively good. And again, it's all perspective and relative. So we're looking at inventory, and this is a leading indicator in terms of prices going up and down. So we saw a big increase of 44% for single family and 11% for condos from last year. But keeping in mind that this is still the current inventories are still 40% below the pre-pandemic levels back in 2019. You also see that 23% of single family home new listings went into escrow or sold in September versus prior year September was 56%. And 33% of condo new listings went into escrow or sold in September compared to September last year, where 49% of them went into escrow or sold. And again, keeping things in perspective, because 2021 was a buyer's frenzy, super strong seller's market, a lot of transactions going through. So again, it's all relative. Another question, is what are the interest rates doing to the market? So this 7.10 is, I got it off of Mortgage Rates Daily, I believe, is the site that I like to use. And I mean, that's of course more than double last year, where we were in below 3% for the 30-year fixed rate. And what is that doing to our market? Well, it's putting a lot of buyers who are going to buy with financing on the sidelines. Um, if you're tire kickers, even more so, they're not even coming out now. So it's kind of cooling things off. It's chill, making them chill. I spoke to a few escrow officers in the last few months, and both of them have told me that, yeah, 70 to 80% of the transactions that are going down for these resale homes are being purchased with cash. And not trying to scare everybody and make it doom or gloom, because it's still, based on the information, it's still a seller's market in most areas. Some areas are becoming a little bit more balanced and having um, more leverage towards the buyers, but still overall, I think we're still in a seller's market. Mm.
The
Also
big thing
looking
is
at
the days on market, right? What did you say it was like 14 days?
18, yeah, 18, which
18.
is still low, yeah. I mean, yeah,
Yeah.
14 was for condos, 18 is for um, single family, but that's still low. And I think I have a slide for that too. Or actually, I don't think I put this month. I've always putting that, and that's a good number to look at. But 18 and 14, that's still a seller's market by definition.
Yeah, normally it's what 60 or 90 days is that
Would
is
be yeah, that would be considered more like an equilibrium, yeah, like more balanced market if it was that 60 to 8. Yeah, exactly. So looking at homes for sale and how it's trending. So, that's going to be another leading indicator, because as inventory becomes on market, if more inventory comes on market, then buyers will have more options, right? And then that would um, hopefully appease the demand, and there's a potential for prices to soften. So if we look at this um, trend here, we see at the tail end of 20, at the beginning of 2022, we see it starting to ramp up, but relative to since going back to 2005, we're still at relatively low numbers, so that's something to consider. I always like to follow up on month supply of inventory, because that's talking about, whatever our burn rate, or the rate that homes are selling for, what will be when will all of that existing inventory, be gone, assuming no new homes come up for sale. So we're still at just above 2 months for both single family and condos. So, looking at this 1 year graph, you see it starting to tick up. But then again, look back in since 2005, and you see that it's still relatively low. It's kind of like when we look at the interest rate trends, right? But one thing I also want to point out is, real estate is local, and so this is, at a macro level. And a prime example that I thought of was that when I bought my first condo to live in, I bought it in 2005, right? And that's when you can see the month supply of inventory was low, almost similar to how it is today. And so I bought it, 2 bedroom, 2 bath in IAEA for 195,000. I'm sorry, 200,000, 205,000. I sold it in 5 years, so in 2009. And according to this graph, it was around the peak of when month supply of inventory was in the, looks like 9.5 months. And I sold it for 385,000. So it did increase a very large amount. And regardless of what this graph is showing, yeah. So I mean, everything is taken into perspective. I show the graphs, again, it's giving us an idea of at the higher level, but real estate is local, you know. So as an example of how um, it was kind of contrary to what this graph shows. Percent of last list price. So realtors, we always get a lot of emails when listings go up for sale or for open houses, and we also get the mailers when prices are reduced, or there's a price reduction or improvement, as some like to call it, for marketing purposes. So recently I have seen an increase in the number of price reductions on listings. So I wanted to show this slide because I think a lot of the doom and gloomers are saying, oh yeah, there's so many price reductions going down, and that's a sign. And yes, that is true, but it needs to be again taken with a grain of salt, because sometimes you know sellers are looking or assuming that the trend of prices are going up, so they're trying to um, compensate or price their home aggressively. And so sometimes when things are starting to shift, it causes for the need for price reductions. But I wanted to show in this graph was that we're still relatively strong compared to historical um, statistics in terms of percentage of last list price. We're at 100% for both single family and condos. And again, taking it back to 2012, when we look at see that same statistic, and it seems like, yeah, relatively speaking, we're still in a pretty good shape. And then again, not to um, give people false hope, but I'm just showing the numbers for everyone to make your own decision. So I put this slide in because we like to talk about the news in Hawaii, and we're constantly talking about the the environment that we live in here in Hawaii compared to other places. So we've always historically had issues with permitting and the timeliness of new construction or remodels to get permitting. So I think this came out earlier this week, where the former Honolulu chief building examiner is now going to change his plea to guilty. And I don't know, just an example of a sign that there was opportunity to be had. Not to say that it should have been done, but there was an issue. There's People were taking a long time, or the process was taking a long time, and for whatever reason, they people found it the need to take opportunity to do these kind of things. But anyway, just wanted to talk to that. Another interesting thing is for new construction developers here in Hawaii. This is the first time I've seen this in this cycle, where in Eva Beach, D.R. Horton has single family new construction developments, and they're actually having a price reduction on some of their inventory that they're trying to sell. So again, giving more perspective in terms of how the market is going through a change. Yeah.
But this is all like kind of it's all a marketing thing too, right? Because they weren't really selling houses for 887. The real price
I
is more like 50-ish, but people like to get discounts.
Well, this is the first time I've seen someone show this. I haven't tracked the original, but I was thinking, yeah, to your point, it could be, but I feel like if someone was really in the market and they saw the prices, they would call it bluff. So it may be the fact that the developer is needing to not unload, but before they can move on to the next phase of the development over there, they need in Ever Beach, they need to sell off their existing inventory. So that could be true too, Lane.
Yeah. Well, I mean, I think I bet you $1,000 to one, Dean, that interest rates are going to go up at least a couple more times in the next 6 months, right? And
Yeah, I
they don't look
mean,
good for some of these home prices. Well, I take that back. I do think Hawaii is a bit insulated, and yes,
Yeah,
interest rates are going to go up, but that may or may not mean that the housing price is going to dip a huge amount.
correct. Yeah, to your point, I believe the installation is due to our living on the rock and having limited space and a stronger demand, and we can't go past the shoreline, right? On this island, right? Versus some other areas where you have a lot of empty farmland or desert, right?
That's it. I gotta talk to you later. I've been looking at something at 2.8 and they dropped it to like 2.6 in the
Okay,
last
okay.
month. So that just kind of goes to your earlier point, right? Of now price the stupid pricing isn't there anymore, right? Where you could ask for 10% plus of what it's worth.
Right,
So
right.
now it's a price discovery moment at this point.
Yeah, yeah. And that's a good point too. You brought up didn't I think information came out today, right? And it was weird because I believe um
Yeah,
it
stock market
the
jumped a little bit.
yeah, which was contrary to what the inflation information came out to. I think it was like 8.2 versus 8.1 for the CPI last month. And
You know what
so
it is? I saw that same headline and it's like Yahoo Finance or all
right.
these headlines are written by bots these days. I mean, you can get like there's I forget what website it is, but like you can write all these articles with a bot. It's
Oh,
just like we're just fed all this nonsense by bot these days, and that's what they use. And there's websites that will like call them out on it. And exactly like the inflation went up, right, by
mhm.
tenth of a point. Yet the stock market went up, which is not what it's supposed to do.
Yeah.
Yet they write this huge computer generated article on it.
Yeah, I was going through one of the articles and it said, well, somebody's trying to rationalize why the markets did that, and they're saying, well, maybe the analysts were able to read further into the details of the statistics and said that there are signs of the inflation. There's hints of it weakening in the future, and so that's maybe that information wasn't that new information wasn't baked into the current market, right? So the rationalization, well, maybe it's because that, and that's why the markets went up. So that was kind of, I don't know if the bots wrote that or whatever, but I was like, okay, well, like to your point, is like, how do you know what to believe, right?
Yeah,
So
I don't know what I tell all my folks like just invest in cash flow. Now's the time you kind of take cover and you know just stay busy or just
yeah,
relax for now.
and try not to get
That's
caught up in the noise and
yeah. But I will bet you I've got my little sticky sheet here and I got this from
ah,
Inside the NBA that
oh,
show. But they have all these
okay,
bets. So I think you
okay.
and I should have some bets. I bet you that interest rates for a 30-year mortgage will get above 8%. Somewhere between 8 and 10%. But at 8%.
That's a I, I would take that bet at 10 maybe. But
You
even
think
that
it's
is a
gonna go you think it's gonna go higher?
if you say it's gonna go higher, then I'll say maybe not. We'll draw the line at 10, and I say that the over under is 10, and I'll take the under.
No, no, I'll give you over under. Let's call eight the middle 8.5. You take under, I'll take over.
No, the middle would be 9 because, and I haven't been reading any of the trending forecasts recently, but for the sake of SNG, yeah, sure, let's do 8.5. And
Yeah,
that
let's
might
do
be a
8.5.
sucker
I
bet
think
though.
that's we have a long way, man. We're not even what are we at? 6 or something or
No,
7?
7.1 was it's pretty close, man. Just considering how quickly it went up, and if they're going at 75 bips every time, and there's going to be a fourth and a fifth one, then
Yeah.
that'll take us over that
But just
easy. So
I mean for people listen, just because it goes up 75 bits doesn't mean that the interest rates that you guys pay are 75 points up.
right, yeah,
I
that's
would say
true.
it's maybe a 2 for 1. So
Yeah, it's not
but
directly correlated to your point.
yeah. Cody
Yeah, yeah,
says 8.5 is a good line. We're at 7.
yeah.
So
Cody, are
7
you
is
over or under, Cody? Let us know. Are you
yeah.
over or under that?
Do you want to put money on this too? So okay, so Dean is
And
gonna
not
get
a G though, not a G. This is
Ian is
for
gonna get under
good
and
sushi
Lane.
lunch.
Okay,
And
okay.
again, this is just for the sake of discussion and for fun and whatever we have at stake. But
Just pass the freaking time before
yeah,
interest rates come down and we can
yeah,
go out and do stuff again.
yep. Moving
Okay, I'll
on.
put this on
Right.
my wall.
Okay.
Okay, moving
Let
on.
me know. Oh, what? Okay.
Says,
So sounds
gosh,
like
over 8.5 would be crazy, says Cody.
okay. So sounds like Cody is
He's
under.
under. Cody, would you like to do a
Ride
side
me
bet
on
with
this bet.
me? Let me know. I will confirm you in.
Okay. As always, I would like to talk about the scam of the month. And this month we're talking about healthcare reimbursement phishing scams. So whenever you do a request for reimbursement, it's a lot of times it's a third party processor that handles it, and the payment processors offer often do direct deposit payments. Yeah, and sometimes of course cyber criminals are always looking for an opportunity to use social engineering to try to get this reimbursement. So in this scam, the cyber criminals send out emails and appear to be related to an active reimbursement request that you made. Of course, the email is asking you for private ID information and supposedly to finish up processing your request. Um, of course, giving them the information will allow them to update the direct deposit information and send the scammers the payments instead of your bank account. So as always, never click on an email that you aren't expecting. Also, watch out for notifications from your account to see if there are any changes to your direct deposit. And then, always try to use the multi-factor authentication on your accounts when they're available. I think last month we talked about even a um, scam around multi-factor authentications, but yeah, always I like to provide these because I want everyone to stay sharp, and it always sucks to hear stories about someone who got duped, especially people who you think would never get duped. So stay on your toes and be diligent. Last fun thing, yeah, I have a listing over in Liliha if anyone's interested. It's a 4 bedroom, 1 bathroom, single family detached home. Uh, it's a nice, cute one. It's just above 1,000 square feet living. There's the land is 4,000, just above 4,000 square feet. It's very close to Liliha Bakery, and there's a nice freshwater stream that runs alongside of it that's fed from the Kunawai Springs. There's actually a urban park just upstream of there that is I visited yesterday. It's really nice. But yes, little fun fact too is I apparently I was babysat in this home when I was 2 years old. My babysitter was there, and then um, my preschool is next door. The preschool that I attended, and kind of fun because this client didn't even know that I was that kid that was babysat by their mom 45 years ago. So that's always good fun. And so they found me in a roundabout referral type way. So, but yeah, if anybody's interested, we're listed at 848,000. But yeah, that's all I have.
think I'm on mute. All right, so we're gonna cover some of these mainland articles. If you guys are interested in more investing on the mainland, syndications, private placements, reach out to uh, check out my podcast, Passive Real Estate Investing. And first thing here, everybody's kind of doom and gloom out there, but why are the big companies like Starbucks planning to open 2,000 new stores by 2025 and invest $500 million in existing locations? Well, they kind of know to double down. I've also got some other articles here how the big companies are going into buying huge tracts of single family homes. Um, Wallet Hub has this report of the 2022 safest cities. Those are Colombia, Maryland, Nashua, North New Hampshire, Laredo, Texas, Portland, Maine. If you guys are interested, Pearl City is number 24, and then Honolulu was number 25. As some more safest city information, Pearl City and Honolulu were on the top 5 US traffic fatalities per capita. So good job, everybody, on that. So this is a chart of the interest rates being hiked up over on a month-to-month basis. And again, I get Dean clocking in at 8.5% or lower by
Mhm.
midsummer, late next year. I don't know. When do you think it's gonna peak, Dean? I think that's another sticky note, right?
I would
You know,
say third quarter, 2023.
and give me a month. Give me a month. I always say quarters because like, that's always a range. But we gotta. This is all
I guess
fun
we'd say
here.
September then.
September
I said
2000.
third quarter. I would rather go October, but we'll go with. So okay, what about just a year from now then? October.
Yeah, I think you have a good guess, but because I can't do the same thing as you, I'm gonna just assume things are gonna take a little bit longer. So I'm gonna call it December of 2023. Okay, sticky is going up on the wall here. But the other things I want to point out on this chart are, back in the 80s, it went up a lot quicker than it is now. And then it also went up pretty quick in like the 94 era. Here are pretty much the same thing put on a more graphical format. So it this has been the fastest uh rising yet, but not nowhere near the peak yet. But again, I think D and I both agree that it's going to get up there, probably surpassing this 88, 89 rise in interest rates. So Stessa reports, or Apartment List reports, increasingly millennial renters are giving up home ownership. Millennials are increasingly choosing to rent. It used to be that 21% of the folks were like, screw it, I'm just gonna rent, which I think is a good idea for some people. 24 now it's like 24.7% this year is what these people are saying. And do you work with younger clients, Dean, or they just no more money?
Yeah, actually, my clientele is usually my age or older. They've been, yeah.
Yeah. Yeah, I don't stay on Instagram or all these other ones. But not my clientele either, man. So let's move on. But maybe these are some of our clients' kids, right? They're millennials, or probably actually millennials are kind of old now. They are between I guess I'm technically an older millennial.
Mm.
Ugh. But here is the generation home ownership rates. So the silent generation and the baby boomers have become one. And I don't know if the silent generation are even alive these days, are they? I mean, aren't average they're like in the 90s or 85 or something like that?
Yeah, but with I don't know how COVID skewed the actuarial reports, but I mean, people are living longer, right? So,
Yeah,
and if we're looking at Hawaii, I think with the demographics, it's probably a little bit older than on the mainland, possibly.
right, right. So all this data I'm showing is all national, so people can take
Right.
that with a grain of salt. The Gen X's are getting, they're getting up to the 70% range. The millennials are creeping up. Um, the one big thing here is they had the biggest increase faster than any other generation this past decade. So although the millennials are, in the last few slides are not buying houses to live in, 25% of them are said, screw it, I'm not doing that. In the last decade, there was a huge ramp up, just amongst their section there. Why? Well, they have no more money. So that's simple as that. Moving on. So, U.S. apartment construction on track to reach 50-year high in 2022. Perhaps that has something to do with a lot of these millennials just choosing to rent for life and just opting in for smaller quarters, something a little nicer, a little bit more luxury, and having the mobility. Who knows? But the professional developers and investors are building now to account for this fundamental need. Some of the top places they are building is New York, Dallas, Miami, Austin, Houston, Phoenix. Oh, I couldn't read that one. I don't know what that is. But then Atlanta, DC, Los Angeles, Florida, Denver. So this one is good to talk to. I think a lot of for your clients, Dean. You know, people are saying a lot of doom and gloom, but there are a handful of things here that aren't happening that typically happens in a market bubble, which is why I personally don't think we're going to see any type of market bubble. We're just going to be kind of stagnant and then off to the races late 2023, 2024. So quantitatively, you have very high supply in a market bubble prior to. That's just obviously not the case, right? Would you say 14 days on market? That is very, very hot market. Um, you also have people buying luxury cars that probably shouldn't be buying it. People watch the Big Short movie. The strippers are buying houses, many of them. We don't have that. And I think a lot of that has to do with the creative mortgages and the mortgage defaults and arms, or the arms just aren't around anymore like they were back in 2008 era. Hurricane Ian rocked Florida recently, and I had a bunch of apartments and mobile home parks in that Gulf area that we sold because we're getting killed by insurance rates.
Oh wow.
A lot of them went up 3 times what it was. So I don't know what you guys are facing here in Hawaii in terms of insurance for natural disasters, but man, like Florida is going to be. This is. I talk to a lot of insurance brokers, and what they tell us is, man, like if there's another one of these major storms like Hurricane Ian, man, the government's going to have to probably step in and back some of these insurance companies because it's just
Oh.
not going to be profitable for them.
What about all those years of them being able to build up the reserves when nothing happened?
Yeah, they don't care. It's like the
Right.
airlines, right? They get wiped out and bailed out, right? They take that off the table as profits. I don't know. Um, so insurance rates go up, especially on the Gulf and the Florida. Graystar to offer financing to multifamily borrowers with a lot of the agency lenders such as Fannie Mae, Freddie Mac backing out of the commercial space, and now we're seeing a lot of the community banks back out, which is why we've kind of swapped strategies from more of an offensive equity strategy to more of a defensive uh, debt strategy with our latest fund. Um, Rent control. So it's kind of interesting. New York and California are a couple of states to be on the lookout for that have been taking steps towards rent control, more rent control, where places like Nevada have kind of cut it off and say, it ain't going to be happening here. I always tell people like, why is this important, especially if you live in Hawaii? Well, these are kind of the battleground states, if you're into politics and voting and stuff like that. But you watch to these more progressive states to what is going to be happening in the future, and I would definitely say Hawaii is a little bit. Well, I can't say Hawaii's it's a blue state, yet fiscally it's kind of conservative. It seems sometimes.
Well, I think recently I did hear discussions of the legislature talk or lawmakers talking about potential rent control for in Hawaii. But it comes up periodically, but I think it gets fought off. Knock on wood.
Yeah, I mean it's just like look at another article here. Like they always bring stuff up, I think, to spur attention. Or maybe it's probably just the media trying to get us to be looky-loos over something out of nothing. But it always seems like a lot of these things, it just kind of dies by the wayside. And but at some point it comes up, especially if one state like California breaks through or New York breaks through with it. The states tend to follow that. Um, think of it like marijuana, right?
Mm.
So what is one thing? I mean, we're kind of following this mindset of we're going to go build assets from the ground up instead of dealing with supposedly stabilized assets. I think the appeal for a lot of people going into stabilized 1960s, 1970s, 80s properties is it's accessible. If you call $20, $50 million purchases accessible, but to build stuff from scratch requires a lot of expertise and capital. Something that definitely the average Joe or the sophisticated mom and pop investor does not have, which is why we want to get in to do this more. And I just came back from our completed project in Huntsville. And I wouldn't live there if I was younger because it was probably too nice. We'll release the videos on that later within our group. So this is where I was talking about, right? Where, people are, I think, frozen. What are the big guys doing, like Blackstone, and others, but they're buying up a lot of single family homes. Now, I wouldn't be too worried if I was a landlords. It's not like they're going to be buying your property from under you or buying all the surrounding properties, but it's happening. And I think this is something that, myself and Dean, like we were able to transcend from the working class, and have real estate work for us. That maybe this window opportunity is not going to be there for the next generation if these institutions keep doing it. So that's your guys' hint right now. Instead of just sitting on the sidelines, get involved, do stuff. If
Follow
not,
the
the
smart money.
institutions are going to eat your shorts. Fannie Mae predicts a modest recession in 2023. And this kind of aligns with a lot of the reports that I read. If you guys ever want, we can send you the reports that we read. You just send an email at team@simplepassivecashflow.com and we can hook you up with those. But, they're saying slowing growth, not going backwards, but just slowing growth in 2023 and then off to the races in 2024 and beyond.
Sounds positive.
Yeah, unless there's a World War III, right? And then all bets are off. But, you always have those black swan type of events looming. But hey, Kim Jong-un didn't blow us up from the year 2018 to 2019. That was kind of the concern, right?
Yeah. Well, hopefully his missiles can't reach us, right? Supposedly.
Yeah.
Even with all those testings going on, those missile tests.
But that's why I wrote these bets, right? Because we write the date on there and then we can, it's kind of a time capsule. We're freaking out about the moment. And then you realize later, man, that was so stupid. You and I were going back and forth 8.5%, either it doesn't get there or surpasses there a lot. Either way, it didn't really matter, in the long run.
Good discussion point and reflection point, right?
Yeah. And then we'll be old, right? And we'll be called the silent generation.
Lane, you remember that day when back in 2022?
Yeah. Yeah. At that point, I don't care because I'll be driving a Ferrari around with everybody. We'll be doing this. Who knows if we'll be doing this, right?
We're doing it for the love right now, so that's all.
Yeah. So South region sees the most pandemic era growth. And then the other question is, right, well, what if there is a recession coming up? Households flock to B and C properties during recessions? Moody's came up with this very exact article, and here are some of the data they came up with. So B and C properties have averaged substantially higher rent growth than A properties, and then B and C properties have outperformed A properties 93% of the time. The one curveball to this, of course, is during the pandemic. A lot of the A-class people were unscathed and able to work from home in their cushy remote jobs, whereas the B and the C-class tenants got rocked. unfortunately. So you
For those
never know what's going to
bifurcation
happen
of the
again. Yeah.
have and have nots.
Uh, but right now, there is a little bit more vacancy in the higher end than in the lower end. But we never know how that's going to play out in the future. So that's why we always stress diversification. I'm not a big fan of short-term rentals, but maybe it's good to have some of that in your portfolio. And in theory, it would make sense to have some Class Cs, but there is a lot more headache involved with that, dealing with tougher tenants. So that's up to you guys if you want to get involved with that. But that's it. If nobody has any other questions, check us out next month. Send any suggestions, questions, and topics to us. You guys can send me an email at team@simplepassivecashflow.com. Dean, how do folks get a hold of you in case they need to
It's
sell their house right
yeah,
away because the
it's
interest rates are going to go up to 10% plus?
yeah, you can just find me at dnoeta@gmail.com or realestateofhawaii.com. That's probably the easiest.
Cool. All right. See ya, everybody.
Free real estate investing group, check out reialoha.com.